All right. Hello, everybody. Welcome back to another episode of the Sunday Market Futures. I am sorry I am late, but I am here. And in about 10 minutes, we are going to get the overnight markets that open up. And, well, it's not going to be pretty. It's not going to be pretty. I mean, I hate to start off the show with a crappy buzzkill already, but if you've looked at the futures, they're on the thumbnail of this YouTube video. If you have not looked at it, it's a little bit worse than the screenshot I'm about to share. I believe Steve will be on in about 30 minutes, so we're going to get some analysis. Also, Chris as well, potentially. So we're going to get some of what their take is. But it's bad. As you can see right there on the screen, it is obviously not very good. I hope people enjoyed the weekend and got to take some time off and not think about the equity markets. I know that's what I said to do when the market closed on Friday, but the honest truth is I've been thinking about equities for the past 48 hours. I've been thinking about stocks for the past 48 hours. I really have not distracted myself in any meaningful way. I've been thinking about stocks, and there's a couple of things that I've been thinking about that I want to share with everybody. We got a bunch of updates today by Lutnick and Bessent and Trump. As of literally 4 minutes before I went live, he tweeted something that we'll talk about. And the conclusion I've come to is that it's just not looking pretty. And the futures are a reflection of essentially what I've been thinking about for the past 48 hours, which has kind of been confirmed by the professional guys on Wall Street, which is that if there is not a reversal on the tariffs that Trump is implementing, we had Dan Ives ring the alarm last week. Tom Lee rang the alarm this weekend. Bill Ackman's been ringing many alarms about how scared he is. And the reason he's scared is because he's got a lot of money in Nike. He's got a lot of money invested in the markets. He does not have $325 billion sitting on the sidelines with cash like Buffett. And he knows that if there is not going to be any meaningful change from the Trump administration, then he's screwed. And his investors are screwed. His clients are screwed. Everyone is screwed. I mean, like literally last night, he wrote up a post saying, hey, let's delay the April 9th extension or implementation of these tariffs to give Trump more time to do negotiations. And my take from that is Bill Ackman is scared. He knows Monday could be ugly. In about 8 minutes, we're going to see how bad the overnight markets look, which when I share some of the levels that it's implying we open at it, it's pretty jaw-dropping. And Trump yesterday posted, hang tough. It won't be easy, but the end result will be historic. And I think that's pretty alarming to Ackman because he basically understands, holy crap, like Trump's actually going to go through with this. And if Trump's actually going to go through with this, then he doesn't have a shot to get the guy to change his mind. Trump, right before I went live, he posts, we have massive financial deficits with China, the European Union, and many others. The only way this problem can be cured is with tariffs, which are now bringing tens of billions of dollars into the USA. Mind you, every single economist and equity analyst and Wall Street guy that I've read in terms of their takes, their tweets, their articles over the weekend, all of it is contingent on a reversal. Even freaking Robinhood Vlad tweeted yesterday, hey, the good thing about tariffs is that they can be reversed. And so everyone's putting out this same idea, which is that we can change this. This is self-inflicted. This is not a pandemic. This is not the subprime mortgage falling out of 2008. This is like something you can literally just roll back and markets can start to price in a different view of the world when it comes to trade paradigms. But it doesn't seem like Trump, based on this tweet that he posted 10 minutes ago, seems like he's backing down. He says the surplus with these countries has grown quickly during the presidency of Sleepy Joe Biden. We are going to reverse it and reverse it quickly. Someday people will realize that tariffs for the United States of America are a very beautiful thing. Obviously, for the equity markets, tariffs are not turning out to be a beautiful thing. So, I mean, look, there's a lot to talk about tonight. I have a lot of different points that I want to touch on. We got a lot of new updates from the administration, and we're going to be talking about that as well. But the larger point I want to make is, yeah, just get ready for some pain, because I don't see, and I tend to be more bullish than not, right? But if the administration is hellbent on getting yields to come down, which Scott Bessent again on NBC today confirmed essentially by saying, well, look, mortgage rates are coming down and we want mortgage rates and mortgage applications to explode. How do you get mortgage applications to explode? You got to get mortgage rates at least closer to 6%, if not below 6%. The only way to do that is to get the Fed to lower rates or for the 10-year to come down. If the Fed's not going to lower rates because they're afraid that tariffs are inflationary and they don't want to start stagflation, then you need to cause some level of economic volatility for the 10-year to fall, which is happening right now because if you take a look at the 10-year futures implied from these bond moves, we're at 3.85, below 4%, which is exactly what the administration wants. And so the point I'm trying to make is that if they continue to want to spearhead this view of the world, aka bond yields over equity prices, and they've been as explicit as you could possibly imagine with that thesis, then Bill Ackman being scared is scared for a reason. He knows, or he's starting to find it out, that Trump's not going to reverse. And if Trump's not going to reverse, it's going to be ugly. We just got an update from Japan. Nikkei futures just suspended trading after hitting circuit breakers on the downside. So Japan has officially stopped trading. The Nikkei should be down, what, 7%? Yeah, just about. Let me pull up those futures. In the United States, circuit breakers hit after 7%. We're already down 5% on the S&P. So tomorrow, if we gap down 7%, we will start to trigger those circuit breakers. Yeah, the Nikkei is down 4%. They just got hit with the circuit breaker, so they're probably not going to be trading for a little bit. Japan tends to be a bit of an indicator on what happens with the U.S. markets. Circuit breakers are essentially when the market says no trading for about 15 to 30 minutes. It tends to be 15. If it happens a couple more times, it turns into 30. And in those 15-minute periods, that's kind of the market's way of just saying, hey, let's chill out for a little bit. Let's calm down. When we open up in 15 minutes, if you still feel like selling, you can sell, but just like it's been aggressive. So why don't we chill for a bit? This happened a lot during COVID. Quite frankly, I haven't seen a circuit breaker since COVID. I don't think there were that many in 2022, if any. So it's ugly. And that is something we could trigger. Like if we get 7% down, a lot of people are thinking about Black Monday tomorrow. Black Monday is from 1987. And Jim Cramer kind of got everyone thinking that, hey, there might be some Black Monday event. The stock market fell 22% on Black Monday. You can see Bitcoin right there. We haven't talked about that today, but that one is below 80,000 as well, down 6.3%. So Bitcoin has now joined the party. I don't know if we could get a Black Monday type of day, given we have the circuit breakers in place. Now, obviously, it could still get really aggressive, but I don't know if we see that bad of a day. I don't really blame Cramer for using this rhetoric, though. A lot of people are saying it's fear-mongering. It could be. But I think he's kind of just putting the pieces of the pie together, which is, hey, if we're not reversing on tariffs, and these tariffs could be inflationary, which means the rate cuts are off the table, at least in the short term, and prices go up, growth slows down, yada. I mean, like when you just put those things, yeah, could it result in an extreme event? Of course. I don't think he's just saying it to say it. I think it could happen. I don't know if it will happen, but obviously the futures are implying that it is pretty ugly right now. So in about 3 minutes, we'll see how everything opens up. Obviously, if we get a reversal tomorrow, I wouldn't be surprised because the sentiment, and you guys can hear it in my voice as well, right? Sentiment is so bearish. I'm like, everyone is just like in the same boat that like the end of the world is coming. I'm not saying it's the end of the world. I think this will be a blip in a couple of years and we'll move on from this. But obviously it's ugly right now. So I wouldn't be surprised if things have a major reversal and money steps in, 7 trillion on the sidelines. Like there's a ton of bull arguments, but the velocity of selling we saw on April 3rd and then April 4th, because April 3rd is when we got the real reaction to the April 2nd tariff liberation day stuff. And then April 4th, it just continued because the market realized, oh shit, no, it's actually that bad. We were right to sell because it's really ugly. Monday might be a 3-day continuation of how ugly it truly is in terms of narratives and then the actual implementation of it. And Trump's not helping every time he tweets that tariffs are a beautiful thing for America. Obviously, it's just creating a lot more pain. This was 1987, by the way. I don't think this is going to happen tomorrow, but this is the chart that's been going around for people that want to look at it. Obviously, I was not born in 1987. I didn't live through that, but I've been reading up about it over the weekend, and it was not pretty. It was not pretty. And this right here is also not pretty, particularly for people living off their retirement accounts or for people that really started investing 5 years ago and had sort of really built up a nest egg of investments by betting on tech and all these amazing companies. I mean, look, if you're living off that and you don't have the time for it to compound as aggressively, it's very, very sad. And this is something that I think the the broader market is trying to come to its conclusion to right now as well in terms of how bad this get. We got the market opening overnight in about 30 seconds. Real quick, just one stat to share with everybody that we'll have a lot more analysis coming throughout the show. Friday's drop was worse or just as bad as 9/11. 9/11, we fell 4.9%. On Friday, we fell 4.8%. On the .com crash, it was down 5.8%. I mean, like it was pretty ugly on Friday and Thursday, and now it's just going to be a question of how bad does it get on Monday. All right, markets are open. Google opens down 2%. The S&P 500 goes below 500 for the first time since April of 2024, down 3.5%. We are opening at 487 on the S&P 500. Rocket Lab is down 4%. Robinhood is down 10%. It is $1 away from below the 30s. Berkshire Hathaway is down about 0.17%. The Qs are down 4.5%. The Qs are $4 away from going below 400. Palantir opens down 5%. It is at $70. It is very close to going below 70. Nike down another 1.5%. SoFi down 7%. Tesla down 6%. Tesla officially back to its, or very close back to its March 13th lows, which was 215. Right now it's at 225. Celsius down 5%. Verizon's down 2%. Carnival Cruise down 3%. Costco down 1%. Snapchat down 2%. Grab down, well, Grab doesn't trade overnight. MicroStrategy down 11% because Bitcoin is now below $80,000. GameStop's down 3%. Amazon's down 4%. 164 on Amazon. Nubank is down 1%. Micron's down 6%. Shopify's down 2%. Bank of America's down 1%. By the way, all of these names were down on average 5%, either on Friday or in aggregate of Thursday and Friday combined. Most of them were down 5% daily starting Thursday. So this is a 3-day continuous motion of pretty aggressive downside momentum. Elf Beauty, a lot of China exposure. That's down 3%. Meta, like the S&P, below 500, 475. That's down 5.8%. Apple is down another 5%. It was down 17% last week. When's the last time Apple fell 23% in the matter of 4 days? Here it is, 5.2% down on Apple. Hims is down 9%. Oxy's down 2%. ARC's down 1%. PayPal's down 4%. Block is down 5%. Even gold is down 1%. People might be selling gold potentially to raise cash to cover their margin calls, which likely are going to be issued tomorrow aggressively. Google right here down about 4.25%. Again, the S&P 500 down 3.43%. Bitcoin right there, 78.3. Robinhood down 13% on the day, $29.99 on Robinhood. Palantir $68 down 8.6%. SoFi $870 down 9.2%, and then Tesla $220 down 8.12% on the day. Is Robinhood even allowing people to trade? I wouldn't be shocked if they don't allow people to trade, because in these moments, liquidity dries up pretty aggressively. And I could understand if they're not going to let people trade. They're still allowing. So first on my app, they're allowing people to trade. So people can still trade. At least for now. It's only been 3 minutes, but we'll see what happens. Oh, NVIDIA. How did we not check NVIDIA? Where's NVIDIA? NVIDIA! Oh my gosh! I was wondering what stock were we missing. NVIDIA wasn't even like, I guess it just like magically disappeared from the watch list. Maybe that was a sign from the heavens to like not look at it. NVIDIA down 8%, $86.74. Yeah, it's ugly. It's ugly. It is ugly, 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 dude. This is more than ugly. I don't even think ugly is the best word. This is 2 years worth of gains destroyed. Now, they can come back as easy. But unless there is any reversal from the Trump administration, because none of these stocks deserve fundamentally to be at these levels given their earnings growth, unless you believe the economic paradigm issued by Trump is going to stay static and rigid, and as a result, destroy the expectations for the E on the P to E, on the PE, the price to earnings of a lot of these stocks. And I think that's what's obviously being priced in right now, that tariffs are going to have a downward effect on the earnings expectations, which is why valuations are compressing, which is why I'm not even that mad at the market for putting up these prices. I mean, the market's going to be the market. The market was happy to give NVIDIA a premium when they were growing and there were no paradigmatic issues around the concept of free trade. Now the market's adjusting. Robinhood right here down 14%. And this is a man-made catastrophe that is playing out right now. Palantir down 10%, but I can't really blame the markets for acting in this way. Tesla as well down 10%. Now Tesla just hit the March 13th lows, 215 that we are seeing right now. Steve will be on in a bit, and I think Chris will be on as well. And we'll get their thoughts. But yeah, how are you guys feeling? I think in a time like this, I have a lot of different clips I wanted to show everybody, but just in general, how's everybody feeling? I think that's more relevant right now to see how everyone's doing. Obviously, this is ugly. Does Steve still not care? Okay, so I was on the phone with Steve a good amount during the weekend, and let's just say he cares, but he also doesn't care because he's so long-term that, like, which is, the right mentality, right? Like, at the end, this will be a blip in the years to come. But I mean, he's acknowledging how shook everybody is. And what we both realized over the weekend is that Bill Ackman is emblematic of Wall Street suits who have made their clients a lot of money in the past 2 years and are realizing that all those gains are about to be wiped out, not because of their inability to, like, pick stocks, which is what you pay AMD, by the way, down 7%, is what you pay a money manager for. It's because of tariffs. And I think that's what everyone's realizing is so disgusting. Nate says opportunity. Ken says more pain. Jake says my stomach hurts. Jack says I'm depressed. The Oceanside says I'm sad. Someone says Josiah says not sure why SoFi is getting hit this hard. Again, a lot of these companies do not deserve to get hit this hard, but when we have a general market downturn, Grab's not even really affected by it. But of course, Grab's going to get hit because the algorithms are not going to let Grab outperform or SoFi when Nvidia is down 40%. I mean, it is everyone taking it on the chin when it gets this bad. Obviously, look, if you've been waiting for a bear market to deploy cash and you have some cash on the sidelines, I wouldn't blame anyone for nibbling in this. But the Robinhood right here down 15%. The pain of what everyone's seeing right now is that this didn't need to happen. We could have had tariffs. Google, my goodness, 137 below 140. Who would have thought, dude? Unbelievable. The point is, this didn't need to happen. We could have had 10% tariffs. We could have had 20% tariffs. We could have had tariffs. But the way it's being implemented, it's not even that people are upset at the tariffs. It's the manifestation of how these tariffs are going into effect and the doubling down on the idiotic nature of the types of tariffs they're implementing. That's what people are more upset about. I don't think people are upset that their stock prices are down. They're upset at the reasoning, the unbelievably idiotic reasoning for why it's down. And I think that's what's hurting everyone right now. Warren Buffett is holding on to his cash, which has been, well, I wonder when he starts buying. I would imagine that's at least some resemblance of a bottom, or at least he's like, yeah, this is just absolutely stupid. But we haven't got any SEC forms from him disclosing any stakes yet. Fear and Greed still at 4. But that was updated April 4th. So I think tomorrow morning it'll update again. Let's just go through some of these other stocks and see what else is down. So S&P 485, Google below 140, Rocket Lab down 11, Robinhood down 15. Robinhood's getting hit because the whole market's getting hit, and they're a proxy to the market. Rocket Companies down 9%, even though they had Rocket Companies was a pseudo hedge on Friday, and it's down 9%. I mean, there is nowhere to hide other than TLT, which is up because rates are down or yields are down. But SMCI down. Let's look at the semis. So SMCI is down 10%. ARM is down 11%. Marvell's down 11%. TSM's down 7%. Broadcom's down 8%. SMCI down 10%. AMD down 8%. NVIDIA 86 down 8%. Dell down 11%. Micron down 10. Lam Research down 6. I mean, all the semis obviously getting wrecked. Like everything right now. Okay, on the semis, what else do we have? Crypto all getting wrecked overnight as well. Riot's down 10%, Marathon's down 12%, CleanSpark's down 13%, Coinbase down 12%, Hood's down 15%, Hood's getting hit the worst. BITX is down 14%, MicroStrategy down 10%, Bitcoin still holding in the 70s, but that one looks like it wants to get hit even more. And then Mag 7, Apple's 5, Microsoft's 4, Meta's 7, Google's 5, Amazon's 5, Nvidia's 8, and then Tesla's 9. All of them Absolutely destroyed. Nate says I'm still up 500% on Palantir all time. Dude, here's the thing about Palantir and Tesla and Bitcoin. Again, super high beta risk assets that are still trading even with this decline at elevated multiples. And that's the only thing that is scaring me as well. That if we have not had max pain, which I know it sounds crazy, but given what we're looking at overnight markets, tomorrow doesn't look like it's going to be that much fun. Do those go even lower? Does Tesla visit below 200? Does Palantir visit below 50? And I mean, I don't think anyone's blaming those individual stocks, but in a mass market sell-off, if you're still trading an aggressive multiple, the market's going to look at something to sell, right? If you're up on something and you need to cover a margin call or your maintenance requirement, or just you need to sell something, you're going to be looking at your winners, and Tesla and Palantir still are winners, and Bitcoin for a lot of people if they bought in the lows of 2023 and 2022. So I don't know. I don't know how those play out, but obviously the market is not being friendly to any of them right now. Rocket Lab right here down 8%, Robin at 15. The Q's officially down 5% right now. Bitcoin, we were waiting for the decline on Bitcoin. It didn't come on Friday with everything else. And, you had a lot of people thinking, okay, is Bitcoin finally acting as the hedge? And even I was pretty shocked by it. I was like, all right, Bitcoin's doing its thing. It's kind of holding up. And then I think at 3 p.m. today, it just fell off a cliff. And everyone was like, oh, yeah, that's what happens when the market takes a dip. Bitcoin tends to follow. So that's what we're seeing right now. Okay, this was April 4th. Let me show you this chart again. So the previous one I was showing was April 3rd. This was April 4th. So on September 11th, 9/11 in the United States, the market fell 4.9%. April 4th, we fell 6%. The dot-com crash in April 2000, when pets.com went public and everyone realized it was full of shit, that went down 5.8%. The Trump tariffs are down 6%. That was worse than the dot-com crash. The global financial crisis in 2008, when everything blew up, we were down 9%. The Trump tariffs on April 4th were 67% of the downside move that we had in October 2008. And then during COVID, it was a 12% down day. We had half the level of downside momentum on Friday that we had in March 2020. This, I think this chart right here, I saw this yesterday and I was just like, oh, or I saw this on Friday, after a couple hours after the market closed. And I was just like, oh, I didn't realize it was that bad. Because it felt bad, but when you put it in this historical context, it was that bad. Obviously, stocks recovered after these things and the market persisted. And if you sold at those very lows, we don't know if April 4th was a low yet, or April 7th tomorrow might end up being the new low. But obviously, selling at those times was not the right thing to do, because things recover as they always do. And this one is not a global pandemic where no one has any control over it. This is something that easily can be reversed, within seconds. But still, it just puts into context how ugly it was and how bad this has really gotten. So this is I get it. If anyone's upset, this is not fun. And if you're young and you can navigate through this and you have plenty of time to let this compound, you can kind of just hold your nose and buy the dip. But if you're a little bit older and you've been living off your retirement accounts and you've been building up a portfolio, this is the part where the short-term pain that Trump is talking about, it really doesn't take into effect a lot of the people that have benefited from the asset accumulation phase over the past couple of years and the appreciations of those assets, whether they were stocks, crypto, or real estate, that are obviously now giving back almost all of their gains. I mean, the S&P 500, 485. Did we 480? A 4 handle on the S&P, was that in anyone's bingo card this year? There you are. It is obviously ugly. It is very, very ugly. Let's get into some analysis on what's going on right here and how this is playing out. I got a bunch of different clips I want to show everybody. I think Chris and Steve should be on in a bit, and we'll get some further thoughts from them. But there's a lot of angles to how this is playing out, a lot of charts I want to show as well. So here's the first thing I want to show. This is from an interview, I think about a month and a half ago, from Buffett. Part of the reason he's probably holding on to $300 billion in cash is because he never believed in the tariffs. Here's what he had to say a couple months ago.
How do you think tariffs?
Hold on, the volume's low. Okay, there we go.
How do you think tariffs will affect the economy?
I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree.
How do you think tariffs will impact inflation?
Over time, they're a tax on goods. I mean, the tooth fairy doesn't pay them. I mean, and see, you always have to just, and then what? You always have to ask that question in economics. Always say, and then what?
So is there an answer for that when people say, inflation persists, consumer prices keep going up? When's the end in sight?
No, prices will be higher 10 years from now and 20 years from now and 30 years from now.
And what do you think about what's happening in Washington right now? About efforts to
I think it's Washington.
Yeah.
It's, technology changes things, all kinds of things, but Washington is Washington. And the problem with politics is that you tend to have to make tiny compromises as you go along.
So Buffett right there basically saying, hey, Washington is Washington. I don't know what the hell they're doing, but I know that I'm keeping $320 billion in cash because tariffs are an act of war. Again, he said this 2 months ago, I think before Trump was inaugurated. And essentially, he's been feeling that they could be inflationary, which kind of explains why he's been pulling out from tariffs. Now, here's some pictures as well that I want to show you guys about regular people on Twitter, right? Tweeting at Trump, many of them Trump voters, and quite literally saying that, I can't believe I voted for you. So look at this guy. I'm starting to think maybe I shouldn't have voted for Trump last November. These tariffs are starting to get ridiculous now that you're affecting my retirement. I hope for your sake, things get better quick. This lady says, Mr. President, I enthusiastically voted for you, but you are failing baby boomers with your constant flip-flopping on tariffs. Collectively today, those who are either retired or planning to will lose billions of dollars in their retirement accounts. This guy says, I voted for you 3 times, Mr. President. However, you have decimated middle-class retirement funds with this trade war. I cannot support you any longer. You have crushed my ability to retire. I agree that things need to be negotiated and better deals need to be made, but we are paying. So, I mean, we are getting a lot of people that are not the young millennial Gen Z that were super excited for this Republican revolution. These are people that have probably been Republicans their whole lives that are just realizing, holy crap, like I was about to retire. And now it looks like unless anything changes, I can't retire because of the drawdown upwards of 30-40% in individual names, probably in the teens of percentage points or even higher for overall portfolios, even if they're just invested in indices that are getting hit. And it's tough to see, dude. It is tough to see unless this game that Trump's playing is going to work, which I don't think anyone fully knows if it is going to work out. Here's some clips from Bessent. So he did an interview today with Meet the Press. Actually, I think we might as well just watch. Like, there's no point in me playing these clips. We should just watch the whole interview for those that haven't seen it. And if you have, it's probably worth seeing again. So it's 12 minutes. He was on Meet the Press. And essentially, he's saying, I'm not worried about the stock market. We're worried about curing America's problems. We'll analyze it as it goes down.
Joining me now is Treasury Secretary Scott Bessent. Secretary Bessent, welcome to Meet the Press.
Chris, good to see you.
It's wonderful to have you here. Thank you for being here in person. Let's start off by talking about the big picture on the economy. A majority of Americans say they disapprove of President Trump's handling of the economy. Consumer sentiment plunged this week to a 29-month low. JP Morgan, Goldman Sachs slashed growth expectations. Why are all of those folks wrong and President Trump is right about his tariff policy?
Well, Chris, and thanks for having me here. And look, what I am not going to say that went on for a long time under the Biden administration and for a lot of the media, and I'm not going to point fingers, but they used to say it was a vibe session and the American people don't know what they talk about. And Donald Trump, his administration, myself, all believe that the American people know what they're feeling and that we believe that our policies will change that. Clearly, they are traumatized from what's happened with this affordability crisis that was brought on by the previous administration. They want relief. We've been in for 8 weeks. We are putting the policies in place that will make the affordability crisis go down, inflation moderate, and that as we set the sails, I am confident that the American people will come our way, even if some of the media narrative doesn't.
Well, and just to be
Now, again, I don't think this is media narrative. He might have a point that the media is displaying Trump's tariffs as not necessarily working because they're using the stock market decline as like a reason to prove that it hasn't worked yet, given the tariffs even haven't been implemented. But to say that the media is twisting the narrative simply because they're showing people get their retirement accounts wiped out, I think is a false equivalency. I mean, obviously the stock market does matter, and although this administration says it doesn't matter, we'll see how long they say it doesn't matter.
Be clear, I mean, these are polls that are taken 2 months into President Trump's presidency. But let's talk about what happened in the stock market this week. Worst week for the market in 2 years. Does that worry you, Mr. Secretary?
Not at all. I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal. What's not healthy is straight up that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great.
I hear you say you're not worried about the markets, but nearly 60% of Americans are invested in the markets. That's their retirement savings. What do you say to Americans who have real concerns that their retirement savings may be in jeopardy?
I say that one week does not the market make. As Warren Buffett says, over the short term, the market is a voting machine. Over the long term, it's a weighing machine. And
dude, no one wants to hear that when they're down 40%. I'm sorry, no one wants to fucking hear that. Like it, you know, and again, you could say I'm being emotional or whatever, but like the point is, if this continues, no one wants to hear this shit. And if no one wants to hear this shit, these guys are going to be voted out. It's just that simple. But like they can only give you the short term for long term narrative for so long until everyone starts flipping their shit.
Again, Kristen, it would have been very easy for us to come in, run these reckless policies that have been happening before. We've got these large government deficits, 6.7% of GDP. We've never seen this. When we're not in wartime, not in recession, we are bringing those down in a responsible way. We are going to have a transition, and we are not going to have a crisis.
Let me play you what some business leaders all around the country have had to say in response to President Trump's tariffs. Take a look.
It would be difficult for U.S. farmers to try and get through some type of long-term trade war that affects our bottom line.
Building the average house is going to cost more.
I don't really understand the goal or the end play here on what's all trying to occur.
Mr. Secretary, you heard that business owner say he doesn't understand the end goal of these tariffs. So help bring some clarity if you can. Are these tariffs a temporary negotiating tactic, or are they a permanent policy here to stay?
Good. So, Chris, thanks for the question. And I can tell you, so April 2nd is going to be a big day. We're going to roll out the reciprocal tariffs. But what I can tell you, and I would encourage your viewers and the public and the media to follow, going into April 2nd, and already now we've seen some of our most imbalanced trading partners come forward and want to drop their tariffs. So by President Trump pushing forward with a tariff plan, reciprocal tariffs, if you drop yours, we'll drop ours. We are already seeing some of the worst offenders come down. April 2nd is an important day, but I would also tell everyone to look what happens from April 2nd to say June 30th as the other countries come down too.
So to his credit right here, one of the White House officials did say that 50 countries have reached out over the weekend about negotiating with tariffs. Vietnam, Cambodia, Israel, Thailand, to name a few of those countries that have reached out. That is the silver lining right here, where the market may be overreacting because we're going to get some deals done. But obviously, we're going to have to see how that eventually plays out.
And President Trump's created a win-win situation here. Either the tariff barriers come down, the U.S. can export more, trade is fairer. It's always been free, but not fair. Mm-hmm. And then we, or if they don't do it, we'll take in substantial revenues.
I want to ask.
All right. So Bessent's essential argument was, hey, we do not care about the markets. The markets will recover the long term. We care about fixing our deficit. We need to have tariffs in order to deal with that deficit. Let's get some analysis from friends of the channel to see how they're thinking of this market volatility. We've got Mr. Chris Patel, and we have Mr. Stephen Fiorillo, who's eating some ice cream.
Yogurt.
Yogurt. I'm happy you're enjoying the yogurt. Chris, Steve, how are you?
Great.
So, Chris, what you think about the S&P being back at 2022 levels right now?
I should have goddamn sold my entire portfolio a month ago. I mean,
You know what's so funny? You know what's so funny about this? You were the first person a month ago to tell me about this whole they're going to crash the market to reduce bond yields theory. And it seems like that's exactly what's happening. But both of us didn't sell because we didn't think they would actually fucking do it. And they did.
don't leave me out of that.
Yeah, so you as well, Steve. You both have been thinking about this thesis around bond yields versus the stock market, which implied a market crash, at least in the short term. But I don't think anyone thought they were actually going to do it. And they did it.
No, the problem is, well, first of all, let me just come out and say one of the mistakes that I made is that, God damn it, like I let my tax efficiency brain get ahead of my investor and markets guy, like movement guy, like brain. So basically, like I didn't want to pay a whole bunch of taxes like next year. So I was like, I have some of these gains. I should probably take them, but I was like, yeah, but I'll end up having to pay all these taxes. So maybe I don't want to do that. So I ended up just holding on, right? And mind you, I thought that the markets would go down, just not to the level and the speed at which they're going down. I mean, that's just insane what we're seeing right now. So I think one of the things, I mean, part of it is a good thing also because you kind of want things to get flushed out quicker rather than more like a drawn out anemic kind of a move, right? So as I was explaining to you and Steve, I was like, if you think about it, a sharp move down also means that when you recover, it can be a nice V-shapes or at least like a W-shaped recovery rather than something more of a stagnant, like low growth, no one's really moving, you know. Valuations were also relatively high. I think they've got into more fair market valuations now, especially if you look at the Mag 7. Mag 7, some of them were trading, like Tesla was trading in the 90s on the PE side. Microsoft was trading in the 30s. Meta was 28 something. Google was the only one that was a little bit more value, but they had like the whole like monopoly overhang. So they were trading at like 20 and 22 on a forward basis. Meta was, you know, so the markets were overvalued. Okay, like let's just be very blunt about it. There was no way around it. Markets needed to correct. The question is, when were they going to correct? And, you know, it could have been a slow, drawn out process, but these guys just, you know, they said, fuck it. They accelerated. And I think now we've gotten to the point where things are very, very oversold. And there's so much fear in the markets that, you know what, I'm definitely going to be a buyer. I think this is more of a crisis of confidence, not a crisis of credit. If you look at the past bubbles that basically bursted, they were caused primarily by issues in credit and really, really, really extended valuation on the NASDAQ side. So if you look at like savings and loans, that was a credit event, right? You look at 2008, that was a credit event.
Chris,
right?
we do have credit spreads that are widening.
No, that's fine. That's not what I mean by that. What I mean is when you have all of this money, like basically money chasing after bad investments, and you have a giant correction, that's what happens. You know, when you, let's say, buy an inanimate object that's not providing any real value, and that's going insane, that's speculation on another level. So if you look at the equity risk premiums that were out there, if you look at the S&P 500 and you bought about a month ago, the S&P 500 would have yielded you on average about 3%. Now buying it today means that you're probably yielding closer to 5-6%.
Right.
And that's with bond yields at 4. So technically speaking, we're more along the lines of fair value. Now, if bond yields come down, if the Fed funds rate comes down to 2%, which is what I think the eventual target is anyway, then today's prices look actually undervalued. Okay. So I would say to anyone right now, you know, I know the pain is definitely there. No one likes to see the sea of red. But there are opportunities that are opening up.
Well, I feel like the whole market is an opportunity. Like, like obviously some names you could say are still extended, but at this point, we're in a crash more than a correction here.
What's interesting is that if you look at a lot of companies that aren't even going to be impacted by the tariffs, okay?
Yeah.
They're also going down as well. So this is where you have to kind of like take a step back, ask yourself like, okay, where do I see this market a year, 2 years from now? Do I see this as the great financial crisis? No, like me and Steve kind of were talking to you about it before we got on here. Trust me, this is nowhere near great financial crisis. Okay. Great financial crisis was bad. You had people literally like getting walked out of their offices. This is a crisis of confidence. That's literally one man's ego putting his thoughts and his ideas before the market and its participants. So this game theory that's being played right now in the background, and from what I can tell, Scott Bessent wanted to do 10% tariffs, which actually make a lot of sense. Stanley Druckenmiller came out and also said, look, if you stay below 10, you're going to be fine. This guy comes out and says, screw that shit. I'm going to listen to Peter Navarro. I'm going to listen to Lutnick, or as some people started calling him, Buttlick, because all he's been doing is licking Trump's butt. They pushed for some crazy, crazy high tariff numbers, and now we're dealing with the fallout of it.
Steve, I want to show you a chart right here and get your reaction, then I'll give you the floor. On Friday, the reaction on the S&P was worse than 9/11 and the dot-com crash. What's your reaction to that, and how are you navigating this right now?
So I'm not doing anything. I have a few things to say about this. September 11th, the dot-com and the global financial crisis were so much worse than what is happening right now. And when you think about the global financial crisis, you also had the Madoff event rolled into that.
Yep.
There were so many things going on. We are so far away from that. One of the things that I was really thinking about in the past hour is the amount of margin out there. You look at levered ETFs like TQQQ, and all these other things, those are going to get absolutely destroyed. And when you have people on margin and they start getting margin calls, they're going to start selling whatever they need to sell to keep their accounts afloat. So I think that this is a sell-off, not from retirement accounts, not from long-term investors per se. They're getting obviously impacted by it. But I think there's a lot of margin out there that we really shouldn't have. I think a lot of people are going on margin because the market's been so easy to navigate the past 2 years, and they're getting stuck right now, and they're needing to sell good assets to get them out of the hole. The problem I have with the market at this point is there are companies that are really not impacted that are getting hit, and there are companies that are impacted that are not getting hit. And it's just not making a lot of sense. And you know that I do not like to get political ever in this. But regardless of who you voted for, regardless of what you think of the president, I have to believe that he does not want to be looked at as the person who tanked a roaring economy. And we're 3 days into this. He can't say everything he wants to say on camera, and he's got to take a tough stance to make it look like he's not going to break. At the same time, there are very serious repercussions if this does not get fixed. The midterms are still a while away, but you're going to start really ramping up in about 8 months now, probably sooner because of all this stuff happening. The last thing that this guy needs is to lose both the House and the Senate, because then you're talking impeachment and you're talking other things. Besides his personal reasons, let's face it, he's got an ego. I really don't think that he is going to allow the way he is viewed to be negative by everybody. If it's 50-50, I don't think he really cares. But at this point, this isn't just hurting one side. This is hurting everybody.
So then what is the solution? Is it deals, negotiations? How does this get resolved?
I think that there's going to be deals. This guy prides himself on being a deal maker. I think there's going to be deals, and I do not think that this is going to last throughout the summer. Every time we have had a down market, all the ones you showed on the screen, Black Monday, everything, the markets always come back. I just think that this is an overreaction because, look, I've talked to a lot of people. I don't know anybody that's selling their retirement accounts off. I don't really know anybody that's selling their positions off. I really do think this is a lot of margin. And look, we are living in a different time where you have algos, where you have high frequency trading at a completely different level than you had 5-6 years ago. There's a lot of stop losses being hit, and people may have bought Meta on the way up and put a stop loss at 550 or 525 because they did a 1 or a 2x and that got triggered. Like, there's a lot of things. This is gonna at some point shake out. I can't see us going down 3 to 6% every day for 2 or 3 weeks.
Let me pass it to Chris. Chris, what do you think is the quickest thing that could happen to resolve what's happening right now?
Well, I mean, the quickest thing is just announcing deals and backing off of, one after another of this stuff. So basically, he announces a trade deal with Israel, right? Like Israel, he's supposed to beat Netanyahu like a couple of days. Israel already removed all their tariffs, and say, look, Israel removed their tariffs. We removed our tariffs on Israel. Another world leader comes up. He says, hey, look, I met with them. They removed their tariffs. I removed our tariffs. And basically, it's just everyone seeing that, hey, if you come to Trump and you basically bend the knee, he'll basically take the tariffs off, and that should solve the issue or something.
But if we don't get a deal with the EU and China, that's the only one that really matters.
Right? Of course. I don't think, well, first of all, I don't think he gives a shit about China. I think China, he's willing to tariff them and basically weaken them from a geostrategic standpoint. He needs China on its knees, right? Europe, on the other hand, not so much. Like, you need the Europeans. They're your allies. They're the ones that are going to have your back. In a NATO standoff. I mean, the Russians right now are also like taking advantage right now of the situation and basically fucking with the negotiations with Ukraine, right? The Ukraine deal might not actually go through with the whole like ceasefire thing. There's another thing to consider. So we're at a very difficult place to be in the markets right now. But once again, max fear is when you traditionally buy, so right now, all I can say is I think eventually the tariffs either are going to get removed or people get used to it. Valuations will get so oversold that, you'll be able to buy stuff that's not impacted by the tariffs. And we'll see what happens then. There's no way I see this guy risking a recession to basically get his theory across and then end up facing the Democrats for the next 2 years trying to impeach him like there's no tomorrow. The other thing is, the longer he lets the markets crash like this, the more guarantee he's giving a recession, because at that point, companies will have to scale back their capital plans and scale back their capex. So if you look at like this week, do you know how many companies were supposed to go IPO? They actually withdrew their IPOs.
Klarna, StubHub, all of them. Yeah.
Which is insane if you think about it. But hey, that's where we are.
Okay, so Steve, before we get into the valuation thing, because I know Steve has a chart he wants to share, and that'll be a long discussion, I want to do a really quick segment on what Lutnick said today. I want to get both your guys' reaction to it, and then we'll get into valuations. So here's what Lutnick said on Face the Nation today.
Great American workers. We are great American workers. We are going to replace
on other
the
networks.
armies of millions of people. Well, remember, the army of millions and millions of human beings screwing in little screws to make iPhones. That kind of thing is going to come to America. It's going to be automated, and great Americans, the trade craft of America, is going to fix them. It's going to work on them. They're going to be mechanics. There's going to be HVAC specialists. There's going to be electricians. The trade craft of America, our high school educated Americans, the core to our workforce is going to have the greatest resurgence of jobs in the history of America to work on these high-tech factories.
So the quote is, the army of millions and millions of human beings screwing in little screws to make iPhones, that kind of thing is coming to America. Chris, let's start with you. What is your reaction to that? And is that the philosophy we need for these jobs?
I'm gonna quote Dave Chappelle. Stop trying to give us Chinese jobs.
That clip is going viral this weekend. Yeah. Steve, your reaction to that?
That's not exactly what he said.
Okay, clarify for me.
What he said is those jobs are going to come back through automation factories, and we're going to create a resurgence in the macroeconomic economy around it, because you're going to need electricians, you're going to need HVAC techs, and you're going to need a lot of skilled labor around it, not people screwing in screws.
No, but hold on. We always need electricians and HVAC people. Those are millions of jobs that Apple employs people in China for. If they get automated, where are the jobs coming from? Like
exactly those areas. When we move those factories back to the U.S. stateside, those are more factories that have to go up, and a lot of those remedial tasks will be automated through robotics.
Then where are the jobs?
The jobs are exactly what I just said. You're going to need more support for the factories.
But it's not going to be the millions and millions of people employed in China screwing in the iPhone right now, which are the
doesn't need to
jobs
be.
that Trump is upset about.
It doesn't need to be. Look at how many people are in China versus the U.S.
Oh, do you agree personally with that idea, or are you just analyzing what Lutnick said?
I'm analyzing what you asked me to analyze, and what he said is they're looking to bring back as much as they can, and the remedial tasks will be automated, but they'll need a lot more support for the factories through electricians, HVAC, and everything else, which it makes sense. I mean, you put up a building in New York City, the amount of jobs that creates because of all the support that goes into maintaining and running the building that we're in. I mean, the amount of elevator tech, there's got to be 2 or 3 elevator techs 24/7 in that building. I mean, just huge support around it. So you start talking about a lot of factories, there's a lot of support. You have restaurants going up. A lot of stuff is going to happen. It may take a while.
I'm not
but
buying
it will
it.
get built out.
It also, yeah, but it taking a while. It's going to take way longer than Trump's term to set up factories in the United States.
It's not going to be a year. It's going to be a 4 to 8 year thing. Easy. It's not overnight, but it's just like when Amazon comes in. So Amazon was supposed to build a factory in Long Island City that got shut down, but they were talking about 10,000 jobs that would bring. And when you have that many people coming in, you're talking about a huge economy to support it, from everything from restaurants, electricians, everything. So
I agree, but there's a conundrum here. Either the automation gets good enough to automate making an iPhone, and that keeps the cost of goods down, because if it's not, the cost of labor is going to go up. Or B, you don't get that type of amazing automation that China seemingly would have deployed by now to make iPhones. It's been 15 years we've been making the iPhone. If we don't have that ready, no American is going to take less than $20 an hour to put screws in a bolt. Like, you know, it's like, so I think this whole theory is just full of make-believe nonsense. It's not real. It's not happening. Apple's not shifting from China to America anytime soon. And I think Americans don't want those jobs. And I think if that's their grand vision, then I don't think it's going to be some epic grand job renaissance in America. Anyway, valuations. Let's look at this.
if you think that the market was expensive previously, now's the time. I mean, I threw in some additional companies. Let me make it a little bigger for you.
Man, how come you got no regional banks in there, bro? And some cruise lines.
We can talk about that in a minute. But in all seriousness, I mean, when you look at Amazon, Meta, NVIDIA, and Alphabet on forward earnings, and we have no information that they are cutting guidance, anybody. These companies are all trading at less than 20 times earnings. When has Amazon is trading at 27 times this year's earnings. These companies are trading at such a low multiple, and they still have significant growth on the horizon. These are companies that are going to continue to do well no matter what the market does in the next 3 to 6 months. So I think that a lot of the pain right now is just algos, stop losses, and people needing to sell other things for margin. And then I'll argue Walmart and Costco have way more tariff risk than Meta or Alphabet. And their cost of goods is going to go up considerably if tariffs really do take form. Coca-Cola sells their beverages in 200 countries and territories. You can't tell me that there is not, at least at the very minimum, the same tariff risk on them as there is big tech. And why Walmart is still trading at 25 times forward earnings when Alphabet and Nvidia are trading at 12 and 14 times makes no sense to me.
Okay, so let me ask Chris, do you think the valuations have gotten compressed so aggressively because we're just not going to get a good earnings outlook for Q1?
I think it's confidence, man. The crisis of confidence is upon us. So some of these businesses are likely to have some material impact on their earnings, but I don't necessarily see that being the case. I do think that there's probably going to be a lack of like 100% clarity on what each company is going to be able to guide out. And the worst thing you can do is have a company say, we're going to have to take back our guidance and we have no idea what's going to happen for the rest of the year because we don't know what the tariffs are going to be like, whether they're actually going to go through, whether they're not. But you know what's interesting that Scott Bessent mentioned June 30th as a date. I have a feeling a lot of this stuff is going to start to kind of die down once the tax bill is done. I think a lot of this fear that we're seeing is a way to basically goad a lot of those House Republicans that are in the House Republicans to vote for the big, beautiful bill, quote unquote. And this is the way that Trump is doing it. So it's not just an exercise on getting external forces to do your bidding. It's also an exercise on getting your internal people to do something, so.
We got a new video from Trump just now. I didn't even know CNBC was live right now. The fact that they're live, it had to be another markets in turmoil. But this is Trump on Air Force One today, I believe. This is what he said.
Right here, take a listen.
We have to solve our trade deficit with China. We have $1 trillion trade deficit with China. Hundreds of billions of dollars a year we lose with China. And unless we solve that problem, I'm not going to make a deal. Now, I'm willing to deal with China, but they have to solve their surplus.
And specifically,
does he have any, okay, if we want to be a little bit positive here, is there any method to the madness where he knows China is cooked right now in their economy? He knows the EU is not doing the best, and he's really trying to pressure them to the best deal possible, and then the tariffs go away? Do you think that's how he's trying to play this out, Chris?
No, I think he's trying to just mess with China. I don't think the one area that I don't think he's going to remove tariffs on is China. Like he's going to definitely keep max pressure on them. It's the rest of the countries that I'm surprised that he's making a move on,
Steve, do you think he's just trying to be the Joker, cause all this chaos, and eventually it's going to end up working?
None of us know what is going to happen. Everything is speculation. My speculation on this is he is in a position of power. He has an end goal he is trying to get to, and he is going to say whatever he needs to say to bring people to the table, because we know that this guy looks at himself as a deal maker. The guy wrote a book, The Art of the Deal, for a reason. Whether people think that he's a good businessman or not, the bottom line is that is how he views himself. I think that he's going to do whatever he needs to do to get people to the table. And basically, I don't see tariffs going the way everybody else does. That's why I'm really not that worried by any means. And this is just another thing. Long-term investors are not going to feel this. I'm more annoyed that this is happening because of people that retired last year and people that were looking to retire this year because their accounts are down 15, 20% right now.
Yeah.
Now, while that could correct in the coming months, it's definitely not a good feeling for anybody, myself included, seeing a lower number. I think that this could have been done differently. I'm not in a position of power, but at the same time, he can't say everything that's going on and give away his hand. So I think that we got to, once again, regardless of who you voted for, I think you got to trust that they are not looking to tank the economy, and fluctuation for a couple of days in the market, unless you're a day trader, isn't really going to impact your life. Now, if this gets elongated and this continues out 6, 12, 18 months, then it's a different story. But at this point in time, there's not enough information to make a long-term decision on what's going to happen. And we just got to look at this as long as this doesn't go on for an elongated amount of time, it's a blip. Same way when you look out on an S&P chart, all these little corrections and retracements are dips.
Would you be a seller here?
I haven't sold a thing.
So when it
And
comes
by
to
the way, hold on one second. You know that Trump just misquoted. We don't have $1 trillion deficit with China, right? Like we have $1 trillion deficit with like the entire planet, but China, our deficit is about what is it? 295 billion.
Yeah, you're right. Yeah.
Okay,
Right.
so technically, let's say they do a 40% tariff on the Chinese or 50%. That's about half. So the Treasury would collect $150 billion a year from China. Right now, they collect about 100 billion, from what I remember, because right now the tariffs on China are about 20% anyway.
Okay, so Chris, when you say that we would collect 150 billion in tariff revenue, wouldn't the side effect be that costs go up and that people stop buying the cheap China stuff?
So I don't think that the amount, like, okay, here's a question. If let's say you have a pencil, right, that comes from China, it used to cost $1. Now it costs $1.40. Is that really a reason for you to basically not buy a pencil anymore? You know,
I mean, when you aggregate that across billions of types of products.
Yeah.
I mean,
I think this is more of a consumption tax than a actual tariff because the way that it's structured. And my personal thought is none of this is going to last. And if it does last for a prolonged period of time, there's going to be areas where the administration ends up capitulating. So.
Okay, but this I want to highlight what you just said. You said none of it's going to last. So even you are under the assumption that 150 billion from China would be great, but the downstream effects of that are so counterproductive that you think the solution is that this will be negotiated. That's essentially your take.
Well, I mean, then you have to remember, once you tariff them and the price of the product goes up, it doesn't go up next year again, and it doesn't go up the year after that, and it becomes a normal part of the cost structure in that supply chain, right? So yeah, in the short term, it's inflationary, but long term, it's the cost of doing business. And if you can produce it somewhere else cheaper, let's say Vietnam or anything else, then you're going to move your production lines there, So it makes China less competitive against someone else. The challenge is, and this is where I'm a little bit stumped, that you also tariffed Vietnam. You also tariffed Indonesia.
Yeah.
All the alternatives that a lot of supply chains were moving out of China, they were going into these other countries. You're starting to tariff them too.
Well, maybe that's the point, because he wants them to come to America, right?
Nah, dude, there's no way. There is no way.
I mean, like, if I was Trump and I don't want you to just shift to Vietnam, I would tariff Vietnam too, which I think is the insanity of this approach, which is why.
Well, there's also some level of supposedly some cheating where things would get manufactured in China, get sent to Vietnam, and then Vietnam would send it to us, and ultimately the money would end up flowing back to China anyway.
So I'm going to float the idea that I floated to the two of you before. A lot of people probably think that this is not going to occur, or that he's not smart enough to do this, or I've lost my mind. But this could be a multi-pronged approach. Implement tariffs, raise government revenue. Prices go up. Doge has been in effect since day one. They've already cut however many hundreds of billions of dollars. By the time everybody is ready to vote on the tax bill, let's just say tariffs go in, costs go up 10 or 15%. Doge cuts a lot of stuff, so you have more revenue coming in, less government spending. You have deregulation, so businesses have the ability to expand, and you have a little bit less red tape and a little bit less cost, puts the government in a position to decrease personal and corporate taxes. If they are able to do anywhere close to what they said they want to do on the personal side, then that would give everybody a huge bump.
Okay, Steve, gut feeling. Do you really think this country is going to let you not pay taxes if you make 150K or less?
I think it's going to be a standard deduction. I don't think it's going to be. I don't think that they can do that. I think it has to be a standard deduction.
No, but doesn't that only benefit business owners then?
No. If every American has 150,000, even call it 100,000 standard deduction, that's wonderful.
You mean off your W-2 salary, you would take off that 100,000?
The first 100 grand is not taxed federally. Anything after that is taxed.
And you think there's a realistic shot they use that so people have more money to pay the higher prices based off tariffs?
I think that they're crazy enough, and I'm going to use the word crazy. I think they're crazy enough to think that they can generate enough from tariffs and DOGE and deregulation to offset everything to give a pretty high standard deduction that will even everything out or put Americans in a net positive place. And if they can pull that off, that will be looked at as one of the greatest things that our president has ever done. He may be going for a home run and sell for nothing less. And if it works, it's the most amazing thing. And if not, it screws everybody. I mean, you're talking about a big, big difference now. So
Chris,
I wouldn't put it out of the cards that that's what they're looking at.
Chris, you think there's a shot for that theory?
Yeah, I mean, look at the screenshot that I just have right now. So this right here is who pays what in terms of income taxes. Okay, so the bottom 50% of people, the number of returns is like 76 million. The average tax rate on the bottom 50% of people is about 3.3%. Okay, the average tax is about $600. The adjusted gross income, which is like 51,000. Well, no, not 51,000. What is it like? Income split points, like, so if you're making under like 46K, you're not exactly paying a lot of money in taxes anyway. You know, the amount of money is what, like 1 point, where is it? Total income taxes paid is about 551. Was it 51 billion?
Million, it looks like.
No, that's millions.
Yeah,
it's 51 billion.
Yeah.
Right. So most people, if you're making under 50K, you're not really paying a lot of income tax. You may be paying payroll taxes and Social Security, but you're not paying a lot of that.
Bring up the actual tax rates.
Like, it's 10.4%. It says right there. Oh no, sorry, that's
no. Just bring up the actual brackets.
Okay, 1 second.
Yeah, it's. I mean, 3.3%. That's on aggregate.
Yeah.
Because remember, everything is a sliding scale. So,
but my thing is, if you're making $149,000 and you get $100,000 deduction, like, you're still paying some significant taxes. Versus
no, you're paying taxes on 49,000,
not 149,000.
Yeah.
So right now, the way that this works is this is single person. So you're single.
Yeah.
If you make 100 grand a year, your tax rate from 47,151 to 100,000 is 24%.
Yeah.
In the aggregate across all this, if you're making 100K, you're probably paying 18, 19,000 on federal taxes. You're still paying your state and city taxes, but on the federal, you're paying 18 or 19 overall because this is all progressive. With $100,000 standard deduction, you would now only pay taxes on $526.
Obviously, that would save me a lot of money.
So you would effectively have a lot more spending power. So paying an extra 10% for goods wouldn't matter. You'd still have a net positive.
And you think this is how they get people to afford American-made products?
Yes. I think this is how they get people to afford everything. They put people in a net positive position, and they're able to deliver an even bigger tax package than they did in 18. If it works. Now, if it doesn't work, he is screwed. But that is the only thing that makes sense to me of why they're doing this.
I know all these cops and firefighters on Long Island, bro. They are loving this because that no tax on overtime. Some of these mofos, they make more money on overtime than they do in their regular salary.
Oh yeah.
You know, they make $80,000 base, but then they make like $100K in overtime. And if you're telling me that none of it's taxed, bro, they are gonna vote for Trump for the rest of their lives, bro.
And if he puts this much money back in everybody's pockets and your products only go up by 10%, but you're now on an aggregate, if you're making 100 grand, paying 18 grand federal taxes, that's now back in your pocket, you're a net positive.
Look, the theory logically can play out this way and make a lot of sense. I think the probability of them reducing income tax and increasing external revenues, given that is their philosophy, yeah, it could happen. I just think it's low. I don't know if they can easily get that done.
Oh, I'm not saying it's a good probability. I'm just saying that if that's not the end game plan, I have no idea what they're doing. Like, I have tried to game this out every which way of why they're doing this. To me, that's the highest probability of why they're doing it. If they get there, I have no idea how to even figure that out. But that has to be what they're thinking.
Okay, so here's what I'm gonna do right now. I wanna talk about the Fed and their reaction, but before that, I want to get your guys' reaction to this clip by Senator Josh Hawley when he was
before that, look, this is what I mean. Celsius is down to 31. How are they impacted by tariffs?
Well, wouldn't some of their cost of goods go up?
What goods?
I mean, I don't know exactly the ingredients that go into a Celsius, but I don't know if they're all sourced in the US. I could be wrong there.
I mean, that's what I'm trying to say. That, like, this is the kind of stuff that doesn't make sense.
I'll give you a better example, Chris.
Uh-huh.
SoFi. Even though I'm mad at SoFi at the moment, they have no tariff risk. And in fact, if rates come down, they're going to thrive because of refinancing. Same with Truist. Truist has no tariff risk. Like, the financials are going to thrive when the rate cuts come because
Steve has a really good point. If rates do come down and everyone refinances, this should be a great bull case for SoFi with the 10-year coming down.
Not just them, the entire financial sector is going to thrive, from BDCs to the banks.
So someone said multiples compressed during a recession. I know that, but I'm saying that the level of sell-off is really, really high. It's almost like 12% in a day. You know, I could understand gradual selling, but I think a lot of this stuff is algos. Like, I think we've got so used to index investing that when basically indexes get sold off, all these other funds have to sell off commensurate amounts of holdings to basically rebalance things. So,
Mick, before we talk about the Fed, go to the U.S. debt clock real quick.
Oh, this
is very important to support what I was saying. Now, if you believe these numbers from Doge, okay, and we have no reason not to at the moment. I would love to see a full-blown audit, but currently they've been in operations for just over 2 months.
Steve, they haven't saved 288. They saved 140, according to them. Like, according to the Doge website, this right here, this Doge clock, is basically a like representation based on the amount that they think they were going to save. Right now, it's about 140.
Okay, so it's half.
Yeah.
So still, they've saved $12.50 a taxpayer. So if they get this up to $1 trillion, that would be $12,500 a taxpayer. So between Doge and tariffs, it really could end up giving us a standard deduction of 75 grand or so and just offset it. It all depends how successful these two things are. And I think that's how they get to the big tax break.
Yeah, look, I mean, logically, if those numbers work out, then yeah, there is a way that plays out. I guess it's just a question of the probabilities right now. Real quick, Kevin, thank you for the $50 super chat. He says, Steve, this sucks. I'm down 300K since the crap storm started. I wish you kept your $50 if you're down 300K, but I deeply appreciate it.
Dude, I'm down $1 million. If that makes anyone, you know.
Can we talk about that for a little bit? Like just psychologically, and then we'll talk about the Fed. How are you guys navigating? You guys have well-paying jobs. You've saved up money, but you're still seeing multi-6-figure or 7-figure downturns. What is your thought process and any advice you can give to people that are navigating a downturn right now?
4 years ago, I didn't have $1 million. So I came from nothing. I can go back to nothing and I can rebuild myself. So I'm not worried about this at all. That's who I am, and that's who I'll always be. If I end up like waking up every morning and worried about, oh my God, I lose all my money, bro, I shouldn't even be in the stock market. I should fucking be nothing but treasuries. But you know what? I figured out how to make $1 million. I can figure out how to make 10 million based on all the knowledge I have now. So I have enough confidence in myself to know, like, hey, sometimes markets go down, and not to mention I still have quite a bit of money. So I'm not, it's hard to see that money go down, but I also know it's all on paper,
Steve, before you talk, I want to play this clip that piggybacks off what Chris said from someone that I think we all respect.
A lot of investors are told, retail investors are told, that they should have a certain percent of their portfolio in bonds. Maybe they're told 60-40, maybe they're told 70-30 stocks to bonds. That's something that you should do, and that's the safe way of doing it. What are they missing?
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business.
So having watched that, Steve, I would imagine you agree with that. And then how are you dealing with this psychologically?
That blurb is one of my favorite from Buffett because nobody drives around a neighborhood or every time they pull into their home having a dollar sign above their home of what it's worth. And you live there for 20, 30, 40 years, sometimes 5, sometimes 10, whatever it is. But nobody is worried about day-to-day fluctuations with home values. It's one of those things where I say it all the time on your stream. I think most people are better off in an index fund. I have index funds, I have total market funds, dividend ETFs, individual equities. I sleep well at night through diversification. Seeing everything in red is not a good feeling, but there's nothing anybody can do about it. And you have to decide what type of investor you are. If you're investing for the long term and you have time on your side, as long as you make solid investments, you could just invest in the S&P 500. And if you have a 20 or 30-year time horizon, this doesn't matter, especially if you're buying every 2 weeks or every month. This really doesn't matter. If you're a short-term investor, you're going to experience a lot of pain. And if you're a day trader, this is one of the worst markets to be day trading in. So the reason that I stay so calm is because the investments I've made are for long term. And I hope there is not a situation where I need the money tomorrow or next week. But at this point, I think that this is going to self-correct at some point. I think the markets will be higher than they are today in a year from now. And I don't think that this is worth losing sleep over because there's nothing anybody can do. And what are you going to do? Sell, pay taxes, and have less money to invest? And what if the market stops going down? Then what? I've never met anybody that can time the market perfectly. I sure as hell can't call the top and I can't call the bottom. But buying every 2 weeks or every month an S&P index fund works. The math shows it works. You can pick any period of time and it works. I just think a lot of people would be better off doing that. So I'm not doing anything.
Amit, you got to be resilient enough to lose it all and smart enough to know how to make it all back. That's all the market is.
I agree, dude. At the end of the day, we are all, as retail investors, playing a game that you can only win when you're long because you have time on your side, because the amount of algos and hedge funds and money managers and manipulation, short reports, all this stuff that you're fighting against, the only way to beat that is time. And within that period of time, like 2022, we will face drawdowns that you have to be able to recover from. And there's moves and opportunities in those downturns that can significantly accelerate the portfolio performance. But nonetheless, you can't be investing in individual names unless you're ready to lose pretty much all of it and see it come back.
I mean, if you guys listen to me about Altria Group, you'd be pretty happy right now.
Yeah. I mean, there have
Altria
been
Group's at 56. And it's paying a 7.25% dividend.
Well, that's the thing. Obviously, people were super indexed to tech this year, which is why everyone's feeling the downturn. But there have been things that have outperformed, and they kept their dividend yields up as well. Okay, so I want to talk about the Fed, but before the Fed, real quick, I want to show you guys this video of Josh Hawley talking about the tariffs, and then I'll connect that with what we think the Fed is going to do.
Your reaction to the tariffs?
Well, listen, I think auto workers in my state are cheering big time. They finally got a president who's got their backs and protect their jobs, raise their wages. And, you know, I think farmers feel the same. Like fair trade deals.
Even though the markets are falling?
What's that?
Even though the markets are falling, I mean, the economy looks pretty concerning
Wall
right now.
Street banks don't like it, but I'm not too concerned about Wall Street. I'm concerned about working people in my state. And, you know, I think this is a chance for them to finally get a fair deal on trade. It's been bad for my state. We've lost tens of thousands of jobs to China and Missouri since China joined the World Trade Organization. 7 million jobs nationwide. I mean, we just can't go on like that. I wish he'd put higher tariffs on China.
Thank you.
Yeah, you bet.
Chris, from a political perspective, do you think he's going to have the majority of the Republican Party supporting him for that argument that Hawley just gave?
Nope. Everyone is probably calling their senators, their House reps, and saying, take back the power of the tariff from Trump before he ends up causing a Great Depression. And every one of those GOP people are beholden to their super donors, and they're probably calling Trump and saying, look, you need to really get this thing under control. I think there are enough. It's too short of the day, so it hasn't been a lot of days where we've seen this, but eventually, even, do you know who Ken Griffin is?
Yeah, of course.
Yeah. Ken Griffin is already on the block right now, shopping this out, saying, look, this is fucking stupid. Like, Ken Griffin, if we're losing a few million here, Ken Griffin's losing billions. Okay.
Yeah.
And Ken Griffin is a mega donor among the Republicans. I'm not talking about like he donates money to like one or two like offhand raises. I'm talking about hundreds of millions of dollars towards Republican candidates throughout the country. So, there's a few people that Trump will take the phone call of. This guy is definitely one of them. All right. And so I think right now, the markets can go down a little bit, but I think there will be a breaking point after which the Trump admin is going to have to move. Otherwise, there's going to be their own party's going to turn on them. I mean, you already see Chuck Grassley in the Senate putting up a bill to basically take executive power over the tariffs back, where all tariffs have to be approved by Senate or they expire after 60 days.
Yeah.
And so these are the kinds of things that are happening in the background. I think by June, July, we'll be fine. I think the market will start to kind of bottom out and we'll recover. So I'm not worried about any of the short-term stuff right now.
Okay, so then having said that, let's end it off here with some conversation around the Fed. So, Chris, you just said there's no way there's going to be a majority Republican support to be able to allow those policies to go into effect. You've got Jay Powell on Friday, who basically said, I'm not cutting rates because tariffs and the uncertainty around tariffs seems to validate inflation concerns even more if those tariffs go into effect. And then you've got Trump that's trying to force the Fed's hand, but the Fed is obviously afraid that if they cut rates, that will be more stimulus in the economy, which could create stagflation because growth will slow down because of the tariffs, but inflation will go up. And that would be a scenario that no one would want. So, Steve, let's start with you. What do you think the master plan is here from the Trump administration? And do you think they'll be able to effectively force the Fed's hand?
If you look at CME Group, they already have. Obviously, nothing is set in stone, but the Fed was pretty adamant because the dot plot increased to go to December 25th or December 10th, 2025. So the Fed dot plot increased where they were effectively going to be at 3.5% this year, went to 3.9%, pricing in 25 BIP cuts. Right now, this is back to at least 4 cuts this year, if not 5, based on what their projections are. I think that Trump has been very clear that he's a real estate guy, regardless if you think he's a good businessman or not. He is a real estate guy, and he wants low rates for many reasons. You have a lot of debt coming due that needs to be refied. You have a lot of businesses that borrowed money. What we should do is look at the 10-year for the past 10 or 20 years. I mean, just in the past 10 years, you had the 10-year between 0.5% to 2% going into COVID, and then 25 bips for a year and a half before they started raising rates. So you had a whole era of cheap money that's all coming due that needs to be refinanced now at 4.5%, 5%. That's going to make margins compress and lower EPS. So there's a lot of reasons for wanting the Fed to cut rates, in addition to a housing market that still has very high mortgage rates, and the refi market is still stalled.
But if tariffs are inflationary, how does the Fed justify cutting rates?
Tariffs would be a net neutral if they're able to reduce government spending and increase the amount of money Americans have in their pockets. If they don't do that, they are 100% inflationary, because they will increase the cost of goods for whatever the companies don't want to pay for themselves. But I think that they're looking at this in a couple of different ways and trying to make this be a net neutral at the very worst. But regardless, cutting rates is something that they should have been doing already. They should not have stopped. I think that they're going to force Powell's hand for the May meeting. I just don't see how the Fed stays stagnant at this point.
Chris, your thoughts? What do you think the Fed does now?
I think if things get bad enough, there's the Powell put, so I'm not worried about that. So I think they'll cut. It's just right now everything seems lost. People seem lost. If unemployment starts to rise, which I fully expect things to happen in the next quarter or two, then the Fed is basically going to have no choice but to cut. Same thing with the Trump administration. I think eventually they'll have to capitulate on some of the tariff things as well, because he has a very limited window where he can allow this to kind of happen. In my opinion, once the tax bill is passed, that'll be, I think, the turning point of all of this stuff, where the rhetoric will die down, in which case now it's going to be all about pro-growth. And, if that happens, then we could
for all this to happen, Chris, he wants to refinance the debt, right? So maybe they need a lot of months of pain to officially refinance and then go back to normal. Like what's the timeline approach to this idea as well?
What do you mean?
Like the 10-year needs to be probably closer to 3% for them to refinance the 9.5 trillion of debt. So until that happens, like let's say you get a bad unemployment report and the stock market falls another 10%. Like if that is the end goal, they're not going to care, right? Until they get that done. So doesn't that mean just more pain for longer? Like you're saying he'll flip course, but until they refinance, he's not going to flip, right?
Yeah, well, it's going to take some time. I mean, we could look at the debt real quick. Let me just share my screen.
So, which in this case, as Phil says right here, it would be months, which is why I understand if people don't want to buy the dip, because
right here. So you can see here, this is the average interest rate on the different securities that the federal government has. So if you look at T-bills, right? T-bills. T-bills are securities that are less than 1 year out, right? So you're looking at this, the interest rate on T-bills is about 4.3%. So let's say the Fed cuts this to like 2% or 3%, right? The 10-year right now, the average yield on the 10-year that we have is about 2.93, and the average yield on bonds, which are 20 and 30 years out, is about 3.2. My thinking is that right now, if they really wanted to, they need to get 20 and 30-year bonds. Let me see what the 20-year bond looks like. Let's see. The 20-year bond is at 4.4. So they still need the 20-year bond to get to like, at least like 3.5, and the 10-year below 3 to make things work. And the only way you're going to be able to do that is by getting Powell to basically be very dovish. I mean, if you think about it, in September of last year, hold on one second, the 20-year bond actually got down all the way to 4%. You know, it would be nice if it was 3.5, something along like right over here around 3 to 3.5. And I think ultimately that's the goal for the Fed, to get this thing down as much as they can.
There's the headline from Trump at the top. Trump says he doesn't want stocks to go down, but sometimes you have to take medicine.
What an asshole, dude. That's such an asshole thing to say.
This medicine is not making us feel any better.
Medicine, bro.
But see, look, we're laughing about it, but that's my point, Chris. If they need the 20-year to get at least a 3.5, Powell's not going to cut to help them do that if the reason they want to get there is by causing pain in the equity markets with tariffs, because to the Fed, tariffs are inflationary, whether that's true or not.
Well, that's the thing. The data is going to prove what we're going to be looking at, right? If PCE goes down because aggregate demand weakens because the economy is going to shit, bro, you can say all you want. Oh my God, tariffs are inflationary. But if motherfuckers don't have money to spend, they stop buying shit. And if people stop buying shit, inflation goes down.
But that means earnings goes down, and that means we're in a full-on recession for the stock market and the economy then.
Exactly.
And then this whole experiment has failed.
Well, that's not true. That means that the Fed starts to cut, in which case now you can start to be more dovish and things go the other direction, right?
Yeah, so then we'll start a recovery from 3,500 on the S&P. That's
it. Powell has a dual mandate: maximum employment and price stability. Right now, inflation is down to 2.8. Oil markets are down to 60. That means input costs are down. Transportation costs are down.
Input costs are down a lot.
Inflation is likely going to continue to move lower. Powell should be worried more about maximum employment and creating a business environment where businesses can exceed. And at this point, in order to excel, you need lower interest rates because there's a lot of debt coming due on the corporate side. You also want an environment where entrepreneurs can borrow at rates where they can turn a profit and hire people. So inflation at 2.8%, nobody is not buying goods because they cost $103 instead of $100. It's just not happening. They're so close to their neutral rate, because their neutral rate's 2%. So they really should start cutting sooner than later. He specifically said on the last call, not this week, but 2 weeks ago at the FOMC meeting, that they're not going to cut until they see one of two things: unemployment go up or move closer to the neutral rate. It's time to start cutting. They're not saving.
No, but Steve, they cannot, even if it's time to start cutting, which I actually do agree with you numerically because of shelter, all these things that are showing true inflation's at 1.2%. But if tariffs are inflationary on the headline, forget like the actual implementation of it, there's no way in hell Jay Powell cuts. He is not going to let
it. It's going to take so long for that to show up in the report. Just because they put a tariff on, let's say they put a tariff on tomorrow, it's going to take a while for it to actually show up into the data. And by that time, there are things they can do to offset it. Like, it's going to take a while to creep in.
Yeah, but I think if the Feds, there's 12 people on the Fed. If they unanimously agree, eventually we will see more inflation from the tariffs, even if it's a year from now. Why would they how would they justify preemptively cutting unless you see massive unemployment? But we're not getting that yet.
Because if they don't cut and businesses have to refi at the current rates when they borrowed at 0.5% or 1% or 1.5%, and they have to refi at 5%, they're going to have to cut jobs to make up the margin. And that's going to make unemployment go up. And that is half of their mandate to make sure you have maximum employment. They have to start cutting now.
So you're saying Jay Powell and the Fed is smart enough to recognize the unemployment that will increase and they will be early to cutting is your argument?
I would like to think they are smart enough to see that.
I would like to as well, but I don't know.
For me, there's one chart that pretty much seals the deal on when they're likely to cut, and it's this right here. This is shelter inflation and then PCE. So shelter is a very significant part of PCE. So if you look at goods have come down significantly, but services have stayed a little bit more stickier, especially things like motor vehicle insurance, right? But shelter, look at this move down on shelter. So shelter inflation is at about 4.2 on average prior to what is that thing called, the COVID. Shelter was going up by about 3 to 3.25 every single year, right? Inflation wise. And the rest of inflation kind of stayed around that 2% target. Now, the key here is that shelter right now, because of just how messed up the situation became during COVID, where people were able to get, sub 3 mortgages, there are not a lot of people are putting homes on the market. But the thing is, you're starting to see this huge increase in housing inventory. So let's just take a couple of to take a look. So if you look at like Florida, goddamn, where is it? Florida.
You are seeing rents come down, I think, is your point.
Not
there.
only rents, but look at the amount of houses for sale in Florida. They're more than they were prior to COVID. So during COVID, like right before around this time, what is it? February, there were 129,000 houses in Florida. Right now, there's 177,000 homes in Florida right now that are for sale. Okay. This is going to impact median sales prices. Same thing with Texas. So if you look at Texas housing real estate right now, look at this. Back to pre-COVID levels again. COVID, it was like prior to COVID, it was steady around this. Now it's here. If you look at rent, average rental vacancy rates, like during the great financial crisis, they had jumped all the way to 11%. But if you look prior to COVID, let's do like the last 10 years, rental vacancies were about 7 to like 7.5, right? In 2022, rental vacancies went down to 5.6, which meant that landlords had more power to raise rents. Now the number of rental vacancies last quarter is about 7, which is what they were prior to COVID. And this is actually increasing because there's more rentals coming on the market. So as more rentals come on the market, the price, the inflation on rent is going to moderate significantly. And when that happens, you're going to see probably housing and shelter component go down below 3 to maybe even 2. And that should anchor inflation expectations going forward.
Right.
Real quick, please. So I want to build on what Chris was saying. And when you look at I'll make it a little bigger.
The other thing is this one too, by the way.
Effective rate is a blue solid, and then the 30-year mortgage is the green dotted line. We're going to look at this from 2 aspects. So businesses from 2015 forward, from 2015 to 2019, it went from 1/4 point to 2.25, way lower than where we are today. And if you were borrowing debt at 10-year cycles, it's coming due now. If you were borrowing debt at 5-year cycles back then, it came due and you refied at 1/4 point. It was 1/4 point for a long time. But any businesses that was borrowing debt pre-2022, the highest amount of debt level that they have, 2.5%, if they were getting it pretty close. Now, when you have rates at 4.5 that are basically double, that's going to impact their profit margins. And there's a lot of debt coming due in the next 2 years. From the housing side, people ran and I refied in 2021, I think. And I know a lot of people that ran and refied. People have no interest in refining now, and a lot of people aren't moving because they have a great interest rate. They're going to lose money because you can't transfer it. So the Fed also has to cut rates because you're going to get a lot of job loss because businesses are going to see their expenses go up because their interest on the debt to service it is going to be significantly higher when it rolls over. And you want a booming housing market, which we haven't had for a couple of years. And the only way you get that is by lowering rates.
But
And
again,
the only way mortgages go down is when the Fed effective rate goes down.
all of this makes sense, but if and we have futures recovering just a little bit right here, instead of 5%, we're down 2.5. But all of this makes sense unless the perception from the Fed for tariffs is that it's so inflationary that even if shelter is lagging, we can't cut because of the unknown of the Trump tariffs, which is the fear, right?
No, there is no unknown. You can absolutely cut, because if you don't cut, you're going to have job loss. Like, that's not something I'm just making up. That will happen.
No, I'm not saying you're making that up. I'm saying that if Jay Powell and Michelle Bowman and all these guys and Goolsby think, okay, 40% on China or 54% or whatever is going to create so much inflation that we physically cannot loosen monetary policy, even if these other things are lightening up, like job losses, etc. What if they just say, we're not going to do anything? Like, what if they're so afraid of the tariff inflation or the perception of it?
It's a scary proposition, because then you run into an area where not only if those things play out that way, you have a very bad scenario fiscally, but you have excessive job loss also. And the Fed should be worried more about jobs than they are inflation.
Yeah, and job numbers are already starting to kind of climb up. If you look at the data,
yeah,
right
but
here.
It's not anywhere. It's not anywhere near.
Whoa. Okay, so basically, prior to COVID, around November, it was 3.6. Right now, it's about 4.2. Okay, and look, if this keeps going up, especially if the Doge cuts make impact not just on federal workers, but also all the contractors that work under them, like if they start taking layoffs, then this thing can go push 5 by the end of this year. If this gets to 5, bro, at that point, I don't think Jay Powell has any choice but to start cutting.
But we just added 228,000 jobs. Like, the idea that it gets to 5 in the next few
But
months.
that's 1 month. That's 1 month.
Okay,
Yeah,
but so you're but what? Hold on. What logic do you have for job growth to slow down in the next couple months? Because I don't. What's the reason?
Because people are going to be firing people, bro. Who's going to be adding jobs right now? Who's going to be adding capex if your stock price just went haywire?
Okay. So you're saying tariffs are the reason businesses will lay off people? That's what you're saying.
Well, no, economic uncertainty will cause people to lay off people, scale back on capex. That's what's going to do it.
Okay.
Also, having a refi debt at higher rates is going to impact bottom lines, and they're going to look to cut the fat. And if they normally do 1 RIF a year, maybe they do a second one, or maybe they go to a shorter cycle for RIFs. I mean, it's not uncommon that companies do RIFs every year. And the bottom line is a lot of companies are operating on cheap debt. Companies' balance sheets are filled with debt. Verizon has $146 billion in debt on the balance sheet.
But to get from 4.2 to something like even 4.7, we're talking about millions of Americans laid off.
Yes, and it's happened before. And the key number is 1%. And what I mean by 1% is every time going back to 57 or whatever it was, the past 8 recessions, a recession occurs when unemployment goes up 1% into a recession. We're almost there. That's the key factor. And I said this to you for years. It's never an inverted yield curve. A recession didn't happen because of it. Unemployment spiking is why you get a recession.
Okay, but how does this sound? The tariffs are going to cause job losses to increase unemployment by at least 0.5%, which will then cause the Fed to cut. So we're going to get our low rates, but I don't think Trump's legacy is that strong there that he induced a recession to get the lower rates. Like, how does the Republican Party?
Why is that? Hold on. I mean, why is that a problem?
Well, a lot of people will lose their jobs.
Right, but that's also what happened during Paul Volcker's time. Anyone right now going back in history and saying Paul Volcker was an asshole? No, right? People said,
but Chris, Jay Powell had inflation under control without decimating the global financial system. And then these itty bitty types of whatever tariffs Trump is implementing, that's the reason this whole thing falls apart. Like, how is he going to be looked on as a president if that's how it plays out?
Listen, at the end of the day, whatever gets interest rates lower is what people will remember as the legacy. You know,
I disagree on
the challenge. No. Listen. Trump could have just said, in my opinion, Trump could have just said, screw it. Who gives a shit about any of this stuff? Let the deficits run hot. Let it run at $2 trillion a year. Within 10 years, we would have been bankrupt. There's no doubt in my mind we would have been bankrupt.
No. But Chris, you can't get that argument because I agree we have to do something about it. 10 or 20% across the board. 54% China, 40%.
No, that I 100% agree. That's stupid. That
is what would cause the recession, which would cause the lowering of rates. But if he could do 10 or 20% across the board and we could keep things stable,
well,
why is that a bad thing?
But that's the whole point, which is what I agree with. I think 10%, everything would have managed. And you saw the markets at 10%, the markets were rallying.
Yeah.
Okay. When he first mentioned 10%, the markets went up. And I think that's what Scott Bessent suggested. But you know what? Scott Bessent lost. And instead, we got Peter Navarro. We got Howard Lutnick pushing for, hey, we need to tariff everyone at 50% like a dumbasses. And that's what happened.
Well, it is going to be quite interesting to see this saga play out. I think if he induces a recession to get rates to come down, we will be appreciative that rates are down, but everyone's going to be drowning in the unemployment. So we're not going to really be able to be that appreciative of it. And if he negotiates and reverses a lot of this stuff and it becomes a 10%, 20% flat tariff, I think markets will recover easily. But if nothing happens, then this is going to be a wild ride that all of us are part of.
There's no justification for a recession. You never want to see anybody lose a job, ever. It's just not good. And there are ways to go about this where jobs are not lost. And the Fed needs to cut rates to help make sure we maintain maximum employment. Unemployment's already ticking up. You don't want that to extend. That's the one thing that everybody should understand. And the Fed really should cut, I would say 50 bips at the next meeting. They're not going.
But Steve, you can't say that when unemployment is at 4.2. Like you can't call for a 50 basis point emergency cut when they don't have.
That's not an emergency cut. That is not an emergency cut. They went up 75 bits 3 times in a row when inflation was going up. Inflation's under 3%.
No, hold on. We went from 2.4 to 2.8 in the past 5 months. That is not a downtrend.
No. When inflation was going up, they increased rates 3 consecutive times at 75 bips.
I remember.
Inflation is under 3% right now. They can very certainly do a 0.5% cut, considering they have held rates steady since December.
Well, they cut.
That would not be an emergency cut.
They cut in December. And second of all, for them to do that type of a cut, you would have a lot of people say, wait a second, job market's fine, tariffs are inflationary, and core inflation is not necessarily coming. It's down, but it's not down to 2.4 where it was in September of 2024. So then what does Jay Powell say to that?
It is a preemptive move because of all the debt coming due. And they want to fortify businesses because they're going to have to refinance at higher rates than what they are currently paying. In order to do that and fortify that, they're helping make sure unemployment does not continue to go up. It's very simple.
Let me make a poll in the chat. Look, I don't disagree necessarily with the logic. I just don't know how likely it would be.
I'm not saying it's likely by any means. I'm not saying it's going to happen. I don't think it's going to happen.
Baba, Baidu, China's feeling this too. There's no place to hide. It's not even like, hey, I can hide away from the US and go hide in China. They're down like 12% right now.
Yeah. Japan just had a circuit breaker. Taiwan just had a circuit breaker. S&P recovered a little bit. It's not down as bad as it was down about 4.5. Now it's down 3.
The one thing I'll say that I hate about all of this is that every single country is no longer going to trust the US, right? This is one of the challenges with democracy. And people forget about this, but Adolf Hitler was elected to power, right?
Yeah.
Every dictator, for the most part, they're all elected to power. Like Xi Jinping right now, he made himself like a dictator for life, but even he was elected by this Politburo, and now he's in that position. So this is the challenge that you run into with people picking people, where people can make a mistake and pick the wrong person, and then everyone has to deal with the fallout. You know?
Hold on, Chris. Let me ask Steve. Steve won't answer this question because he's not political. Chris, do you regret voting for Trump?
Yeah, I regret it because I'll be 100%. Like when it comes to the market, I think that he's risking way too much. I think he's risking the financial health of this country, and I think he's risking the trade relationships, but then also military relationships with all these other countries as well. You know, if you want to fight the Chinese in the future, you're going to need allies. And basically going around telling every single country, you're stealing from us, you're robbing us, you're raping us, bro. That's not how you build that's not how you build alliances. You know, you're not the you ever met a school bully at a school reunion? No
Dude,
one gives
I
a shit.
was the school bully.
Shut up. No, you weren't. You couldn't bully a fly, dude.
Okay, go ahead with your analogy. Go ahead.
Yeah, no, I'm just saying, like, when you think about how Trump is operating right now, people will lose trust in the institutions that is America and the United States. You know, Trump is saying, well, that's because people took advantage of the US. And it's like, bro, we're the richest country on the planet. If people took advantage of us, we would be making the shoes. Okay. We would be out there in the rice paddies, you know? If they're
he wants to bring those jobs back, which is the most confusing part about all this. Too.
I think that, like I said, Chappelle was right, man. He's like, I want to buy Nikes. I don't want to make them.
That clip is going viral. It's going very viral. Okay, so last super chat, and then we'll end it out for today, guys. Thank you all for being here. JJ, thank you for the $5. How long does Steve think until we get to the next all-time high? Steve, you were pretty bullish on this market going into the year. Obviously, we're in a correction. When do you think things get a little bit better?
We don't have enough data to make any predictions. We need the next 3 weeks to happen. I'm not comfortable making a prediction because I don't have enough data at this point. When this month is over, we should have a lot more data on the tariffs. We'll at least hear from the majority of big tech. We'll be able to put some things together. Right now, we just don't have enough data. I would not be doing anybody good sharing a personal opinion. That could change in a week or two.
I agree. I'll be waiting for the basically like GOP. I want to see what the party ends up doing to try to kind of dial Trump back a little bit, and maybe even Scott Bessent to try to moderate things and bring some more, I don't know what to say, like basically moderate on some of the tariffs. Remember, the 40%, 50% tariffs have not gone into effect yet. Those go into effect April 9th.
3 days.
The 10% tariffs, they have went into effect this weekend. So,
okay, so here's the last poll asked in the chat. First of all, 58% of you said yes, the Fed should cut rates now. Here's the next question, and this is the last question for both of you. Like really gut feeling scale of 1 to 10, how likely do you think it is before April 9th where Trump says, we got a deal, we're not going to do these 30, 40% tariffs, and like it's not going to go into effect? How likely is it that he retraces?
no clue, dude. No one can tell. Bro, I didn't even think that Rose Garden day that the guy would do more than 10, which is why I was bullish on it. That's why I said I thought the bottom was in, that he would not risk going into recession. Well, guess what? I was wrong. That just happens, you know?
Here's what I don't get. I don't understand why everybody thought he was bluffing. I don't know why the market was where it was. Trump's been talking about this since the 80s. He hasn't changed his stance. Everybody knew what he was going to do. This was a cornerstone of his campaign. Now, you can argue that you didn't think he was going to go this extreme. You didn't think this is the way he was going to go. But he is somebody who has nothing to lose, who can't get elected again. So he's going to try and make the biggest impact possible. I don't want to get political, but I will say that I do think that he is going to try to make deals. I don't think that he wants to be remembered as somebody who tanks the economy. And I don't think he really wants people pointing to that clip of Kamala during the debate saying that the Goldman Sachs economists and all these other Nobel Prize economists all said if Trump is elected, we will enter a recession halfway through 2025. I don't think he wants that to come true.
Hold on, can I play that clip real quick so people know what you're talking about? So this was the clip.
Then I'll finish my thought. Yes.
Goldman Sachs has said is that Donald Trump's plan would make the economy worse. Mine would strengthen the economy. What the Wharton School has said is Donald Trump's plan would actually explode the deficit. 16 Nobel laureates have described his economic plan as something that would increase inflation and by the middle of next year would invite a recession. You just have to look at where we are and where we stand on the issues. And I'd invite you to know that Donald Trump actually has no plan for you because he is more interested in defending himself than he is in looking out for you.
I don't think that he wants that to become true. I think that everybody has to give him the benefit of the doubt, whether you want to or not. It's 3 days in. When it's 3 weeks in, I think it's a different story. But we don't know what's going to happen tomorrow or the next day. And there's a good chance that he's been taking a lot of calls over the weekend, even though he says he didn't. And there could be things in the work. I don't know.
I think we should all tweet him that video. Go on Truth Social, post that video, go to his Twitter account and just all post that video. And just at him, at Donald Trump. And basically the minute he opens up Truth Social, he sees like 1,000 videos of Kamala saying the same thing. Like he can't avoid it,
But you have to game it out. And the last thing that and look, I don't know him. I'm just trying to think, if I was him, what's the last thing I would want? The last thing I would want is the other party to take a sweep in the midterms. And I don't see how that doesn't happen if things continue this way. And you have to think that they're going to protect themselves. And by doing that, they have to right-size this. So we got to give him more time. Does this suck? This absolutely sucks. This absolutely sucks that everybody's account is down. The question is it going to be down in a month from now or 2 months from now? Nobody knows.
Where's that video? Let's tweet it to Donald Trump and let's all retweet it at the same time.
I'm not tweeting. You could tweet it. Steve sent me this last night, and I was like, "Holy crap!" I just sent you.
DM me.
This could go viral though.
Yeah, it should.
I mean, it's already. How many views does that video have? It has freaking 2.1 million views in like 48 hours.
Yeah, but you got to at him. See, that's the thing. Like if all his entire feed is nothing but that, there you go. Then that should be something to mess with him.
Here's
Don't
my
worry, man, I won't say it.
Say what?
You know what I'm going to say.
I really have no idea
what I was busting your chops about before.
What?
Chris said you have to say at him anyway.
Oh, okay.
Yeah,
that's an inside joke. But here's my thing. The psychoanalytical framework that I've been looking at, and maybe I'm wrong on this because Trump is just negotiating, but it really looks like this is his last term and he doesn't care. He just doesn't care, right? Like he's going to burn it all down to get this magic plan to work. And if it doesn't work, it's like, oopsie. But it's kind of getting that kind of Joker vibe, right? Where he's like, let me just cause as much chaos and see if it works out. And if it doesn't, it doesn't. And maybe that's what most people underestimate. I definitely underestimated that he would.
I think that people didn't take him seriously, that he wasn't going to do as drastic things as he said he was. Well, he did. And remember what happened in his first term when we got into a trade war with China? The market went down. And then it ultimately went back up. Now, granted, this isn't just China. This is the entire global economy.
Yeah.
That doesn't mean that this can't be fixed. And the market is reacting to things that haven't even showed up yet. So I think that we have to give it a little bit of time to play out. But you got to believe. You have to believe that he does not want that clip to become true. And you got to believe that they don't want their party not to be in power. And they know that 2 years goes by really quick. And if you do not have a strong economy with a strong stock market, you're going to get voted out.
Here's the other thing we haven't even mentioned. The stock market 10 years ago was not the media attention grabber that it is today. And obviously GameStop and Robinhood fueled a lot of retail excitement. But the fact that there's finance channels and there's this big thin twit community on X, like the fact that all these people every single day talk about stocks means that it's not just the average investor that's affected by this. It's a lot of people that just follow some stock market commentators, and they see every day what's going on in addition to the music stuff they follow, the sports stuff they follow. But more and more people care about the stock market. And the idea that it's only investors feeling the pain, it's not. It's everyday people that might have downloaded a Robinhood account and bought some stocks, and they're feeling the pain as well. Like 10 years ago, it was more so if you watched CNBC and Bloomberg, you felt the pain. Now it's like there's a whole new media landscape for how people think about the stock market 24 hours a day.
Well, there's a few things that go into that. I'm going to say something I've said a couple of times. Your chat is awesome. Some of their comments are absolutely hilarious. But it is a different world now. You have to remember, 10 years ago, you didn't really have smartphones with these types of apps. This was not a on-demand stock frenzy. I mean, people have this at your fingertips every day, 24/7. It's in your face. There was no social media back then.
Yeah.
So it is much different now.
Like what I'm saying is I have buddies who text me that really don't care about the stock market, but they're seeing what's happening, right? So it's not like they're not looking there. It's not like they're not forming an opinion of Trump in this time and kind of associating him with this stock market downturn. Everyone is. And it obviously hurts everybody right now.
The amount of t-shirts we could make we should have a whole merchandise store with some of these comments. They are great. 401ks to 201ks. That's great.
Yeah,
Make the markets green again.
Oh no, I just tweeted just now my latest tweet, and I'm dead serious about this. My barber better relax asking for $50, bro. Because he tried to do that last time. And I'm like, hold on. It was $20 4 years ago. Now I'm paying 40. 50. Like, I'm gonna tell him the S&P is down 20% next time he asks for 50. So, or you guys are gonna see me with a bad haircut. It's one or the other. So.
I would have said dollars or rupees. This dude is definitely pricing this shit in rupees, bro.
Dude, but he's like, I've trusted him for years. So like, to be honest, he could he could charge me 100. I'd probably pay that shit, dude. But like, I'm like, next time, I'm just like, all right, let's chill out a bit. Let's chill out. I don't want to show you my Robinhood right now, but let's just chill out right now. All right, cool. That's it for today. Thank you everybody for being here. Hopefully Steve and Chris helped over the course of 2 hours with just dissecting and analyzing what's going on and putting their Twitters right here in the chat. Guys, any last words as we get into the market open tomorrow? Steve?
Yeah, I think everybody needs to take a breath, take a step back. If you didn't sell already, most likely you're not going to sell, and just have a long-term mindset. Look, I'm down just like everybody else. Eventually it'll come back. If you don't need the money tomorrow, just wait it out. There's nothing any of us can do to fix this. So I think everybody has to also think about it as anything you put in the market, you should be willing to lose. Yeah. If you're not willing to lose the money, put it in a CD. And that's the other thing. Like the people I feel bad for now, not us. It's people who retired, people looking to retire, or people who were saving for a home that were putting their money in the S&P to get a little bit more juice instead of putting it in a CD. Those are the people that I feel bad for at the moment. You know, I'm not worried about us at the moment because you know what? Eventually this will correct. Eventually index funds will go back up. It may take some time, it may not. We don't know. Anybody who says they know, they have no clue. Nobody knows. We need more data, just like Powell says, and maybe we get more information this week. We'll see.
Chris, your last words for today?
I don't know, man. I'm on Twitter right now, and when I see some people still kind of like super like, oh my God, I love Donald Trump. I think he's doing the greatest thing. Bro, have the self-courage to actually criticize shit when the guy is doing dumb stuff, okay? Whether you're a Republican or a Democrat, if a Democrat's in charge and you voted for a Democrat, if they're doing dumb shit, you should have enough courage to criticize your own people.
Let's just say all those MAGA emit comments are probably slowing down a little bit because obviously I'm critiquing the guy because this whole strategy is ridiculous.
Yeah, look, if he had done 10%, I agree with that. 40 is just ridiculous. I don't know if it's a negotiating tactic or whatever, But what you're doing is you're causing a lot of irreparable harm in the belief that the U.S. can anchor the economic stability of the world, and you're starting to see that play out. And the thing is, it's not good because it brings a lot of uncertainty into the markets, and people, are losing their jobs. They're losing, I mean, not yet, but basically if things go on like this, people lose their jobs. People's people that are close to retirement, their portfolios being down this much has an impact on their health.
Chris, I think what's really sad are people like Chamath taking victory laps on Twitter,
Yeah,
People
that's just an asshole move, man.
people who are incredibly rich, which will get to buy these assets at very low prices when they really do bottom. The average American barely has $500 in emergency account. They're not going to buy Nvidia down 50%. So, I mean, the rich will get richer because of this. And I think if it doesn't actually work, aka we get into a full-on recession, then hopefully people would criticize the strategy.
Yeah. Like I said, I think he's getting bad advice, to be honest with you. I think he should have listened to Scott Bessent, kept it at 10%. The markets would have rallied. People would have been happy. The Treasury would have got their money. If the Treasury gets their money, they could use that to, pare down some of the debt. Inflation's already come on its way down. Why tank the markets to do the same thing? And believe it or not, I honestly think Trump is the reason why we've had a resurgence in inflation in the first place. When he won the election, he started going on about tariffs. And so people started front loading. Businesses started front loading. If you look at the trade deficit, hold on one second. Look at the trade deficit. Give me 1 second. Just pull up the data.
Spencer says, I have 25,000 in my emergency account. I will repeat the joke. It's not an original joke, but Bay Ray made this joke. The market's crashing, so it's an emergency to buy this dip. So you better liquidate that 25. That's what you use it on, buying the dip.
Take a look at this. This right here is the balance of trade for the U.S., right? Look at what happened after Trump got elected. Before Trump got elected, it was $73 billion a month. Look at this. It extended all the way to 130. Okay. And why did this happen? Because all these companies started front loading purchases to make sure that they had enough inventory to weather any sort of a supply shock from this tariff nonsense. So theoretically, Trump caused this resurgence in inflation.
Yeah, because it forced people to import to avoid the tariffs, right?
Yeah.
Yeah. Steve, what were you saying? You were muted. What were you saying?
I was just going to say, remember, the markets went up into February, full well knowing this guy was going to implement tariffs.
I mean, I guess they didn't know to what extent, right?
Yeah.
To what extent, yes, but this isn't new. I just think that we all need to take a beat. And I think that the markets declining is worse because of how much information is in everybody's face every minute. Algos and margin. I think a lot of people are getting margin calls, and I think that that's really making this extended.
Dude, my only fear here is I don't think in the next 2 days we're going to get some magic deal. That's all. I mean, China, I'm looking at some headlines right now. They're doubling down. They're saying we're not ready to negotiate until the US takes away their tariffs. I mean, it's just like in 2 days, really? We're going to crack some deals in 2 days. If not, then April 9th. All right, it's in. And maybe we get a deal on April 10th, but it feels like this is going to take a second to play out.
He can suspend them.
I mean, we just played a video of him saying, yeah, he could. I just
what he says and what he's going to do, two different things.
I agree. In 2 days, we'll find out how serious he is about him.
God damn it, man. I'm going to have to look my fucking liberal friends in the face, and they're all going to goddamn look at me and be like, yeah, we told you, motherfucker. See? Mr. Trump support over here. I mean, my father-in-law is already cracking jokes, Like he sent a message in our group chat. He's like, "Hey Chris, how's your friend doing?" Because like I'm like the Trump supporter in like the family, So
yeah, I mean, anyone. And here's the thing, dude. There are some very public personalities, like a Chamath, right? Millions and millions of followers, whose pounding the table that Trump is doing the right thing. I mean, I'm really curious to see how this plays out because they are essentially going down with the ship, and it better not be the Titanic. Otherwise, who wants to be the person supporting
Remember,
this type of
Trump
policy?
has a massive ego. Okay. We all see that he has a massive ego. I can't believe that he is okay with this being tied to his presidency for his legacy. I don't think that that's going to be the case. Maybe I'm just being optimistic, but when you watch that debate between him and Kamala, I think things are going to be different in a couple of weeks. Otherwise, they're going to be in a lot of trouble come midterms, a lot of trouble. And I don't think they're willing to risk that.
And look, Matt has a point. We have an insane level of interest and deficit and debt, and something has to be done. It's just the market's going to punish Trump if they don't think this specific way of getting the job done is the right way. And he either goes down with the ship or he reverses and eventually.
Yo, tax the rich. I'm no longer rich, so you know what? Tax them, baby.
That's facts. I'm not rich anymore. We can tax the rich. I'm not part of that class anymore. Screw them. Who cares about them? No, I'm just kidding. Steve's not saying anything because he's like, these motherfuckers don't know I'm still rich.
Yeah. I'm still doing good, but not as good as I was doing before. You know.
Look, no matter who won, there were problems that needed to get fixed. How they were going to go about that were two different ways. I just think, though, even if he didn't win and somebody else was in, I think you got to give them a little bit of time. This is still the infancy of this presidency. And we got to see. We don't have enough data. We really don't. And I know that people are making jokes, oh, that's what Powell says. Well, we really don't. Look, the guy has a huge ego. I just don't see that they're going to allow a clean sweep in the midterms, which is what this is setting them up for. So you got to think that there's something behind the scenes that they're not saying. Maybe that's me being optimistic. We'll see. But this week's going to be very interesting. And I think the markets are overreacting at this point. I really do.
All right. That is it for us. Thank you, everybody, for being here on a Sunday night. Obviously,
Wait, Ahmed, I got a clip for you. Hold on one second.
Is it copyrighted?
No. It's from South Park.
That still might be copyrighted, but it's okay. Yeah, we'll be live on the Market Open again tomorrow, 8:45. For those that are new here, Steve's Twitter is in the description. He is a prolific writer on Seeking Alpha. I would highly recommend following him on Twitter. You'll get all of his articles there. And then Chris is one of my favorite macro minds, so I would recommend following him as well on Twitter. Cool. Yeah, and that's pretty much it. We'll be live on the Open tomorrow. We'll see how bad this opens up.
So damn it. So I think that was less.
Chris is definitely, that's hilarious. Chris is laying down. He doesn't give a fuck right now.
Yeah, dude. I'm about to go to sleep because I got work tonight. So give me 1
Wait,
second.
how are you going to sleep if you have work tonight?
I still have 2 hours before my shift starts. All right, here we go.
Oh, Chris, how vulgar is this? Because
It's not that vulgar.
No, but like seriously, bro, is it like I'm reading the title?
No,
and it
it's
feels-
not. It's not. It's just comments. It's not.
Okay, look, if you're watching with kids right now, I would just fair warning. Chris is a little wild, so if you have the kids around, just turn it off. It's okay. It's the end. Like, all right, that's the warning. All right.
Suck my balls, suck my balls. Hello? And you come here and f me. Okay, quit the act. I'm not f***ing you and you know it. No, you f me. No, you f me. You.
That's pretty much how Trump is negotiating right now.
That was so stupid, but it was funnily stupid.
Yeah,
I don't get it.
Steve has a job. That's why he's not allowed to laugh at that. Yeah, essentially it's a stupid back and forth around who pays less prices. Both of them have a point, but it's so much it's so much pain going back and forth from each side that they inevitably just settle on, all right, what about 0%, which is what I think Trump is wanting.
Oh, isn't that what Elon was saying?
Elon did have a video out this weekend as well saying that, I mean, we might as well watch that, dude.
We don't have to. All I'm saying is we don't know what's going to happen.
Yeah, it's a quick video, but basically Elon has been pretty silent about tariffs for a while. He did some interview from Italy and he said we should get to 0%.
I do want to address one thing. I will say to everybody, my Pokemon collection is doing phenomenal right now. And it may get sold to dump it into the market.
Okay, let's finish this, then we'll discuss that real quick.
I hope that the United States and Europe can establish a very close partnership. We obviously are, there's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe. And I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America. That would be that's what I hope occurs.
I don't know if that's happening, right? But even Elon's not really endorsing going 40% to the EU, right? He wants a 0% rate. And it's just going to be a question of how bad or how good the negotiations are to inevitably get there. Cool. Okay. So yeah, Pokemon is surviving as per Steve for now.
Mm-hmm.
I've got a good chunk of money in the private markets. The good thing about that is you don't have to look at it, and hopefully in a couple of years this doesn't even matter. But I'm assuming that's taking a bit of a hit, right? Like, is XAI really worth 75 billion or 113 billion right now? Is OpenAI really worth 300 billion? If OpenAI was a public stock, it would not be $300 billion, right? So definitely the private markets are getting hit. Maybe that catches up to Pokemon, maybe not, but it's hard to find safety anywhere currently right now.
Yeah, we'll see. Look, we got to get through this week and see what happens.
All right, cool. Thank you, everybody. Appreciate it. Chris, any last words?
Yeah, man. I know a lot of people are like, oh, this is the art of the deal, out of the deal. Well, I hope that if you lose your job and you're a casualty of the art of the deal, that you still say that. Because I can tell you, as unemployment goes up and people lose their jobs, it's not a great place to be, both emotionally and like for us, all we're doing is losing paper money. But if he causes people to lose real jobs and real like health, that's a big tragedy, So I'm always of the mind that it should be the job of politicians and people in charge to figure out the least painful way to get things done, right? And if the only way that you think that you can get things done is by causing a tremendous amount of harm, then I'd say that you should probably be looking at other avenues. So yeah, that's my only thing with Trump.
Maximum employment over price stability.
Agree, 100%.
The Fed should be cutting. We should not see any Americans be losing their jobs. And there are things that are avoidable. And the Fed can step in and they can start cutting rates. And that way, when businesses have to refi at a lower rate, less of a percentage of unemployment continuing to go up. Because at this rate, the way unemployment is tracking, if you have Fed rates at these levels, expect unemployment to continue to go up. And we should try to avoid that at all costs, because that is separate from what Trump is doing right now.
All right. Chris and Steve, really appreciate your time tonight. Thank everybody for joining. We will be live on the Market Open tomorrow. I'm sure I'll hear from Chris and Steve later in the streams this week. And yeah, April 9th is the next big day. We are going to see if these tariffs go into effect. All right.
Later. Take care.
Thank everybody. See you guys tomorrow. Bye, everyone.